2022. Well, for more, I'm joined by Noureldeen Al Hammoury, Chief Market Strategist at Equiti Group. It's good to have you. So look, oil prices surging past $100 on the barrel, their biggest one-day spike in years. Warnings not least from the CEO of Qatar Energy that oil prices could hit 150 if this continues. Asian stock markets getting thumped this morning, which doesn't bode well for Monday's session on Wall Street. What's your perspective?
Yeah, it was about less than a week when we both talked about the idea of just a 2 weeks scenario, which we're entering now the second week, and we're already at almost $120. Although we did sort of retrace a little bit at the beginning of the European session back to 107. We're talking about Brent here. Now, the most concerning, at least for the time being, is the forward spread, which is now between today's Brent and the next contract is now at $8.50. This is a record we haven't seen before, but it gives us at least a clear indication that it's not about production. It's not even about it's not about production, but it's about deliveries. Traders are scrambling to get the oil out of the Middle East, and this is going to be the major issue now. I think if it continues now, which is the second scenario over 2 weeks, we'll be looking at least $140, $150.
What have you seen as evidence that leading countries, are intent on doing something about this? I've seen some moves, at least in principle, from G7, President Donald Trump describing surging oil prices as, quote, a very small price to pay for global safety and peace. But there clearly are some significant concerns behind the scenes. I mean, energy prices, energy security, the global economic impact, is really in play at this point. How do you interpret Donald Trump and the US stance here, especially in the context of rising fuel costs for consumers and that broader economic impact?
Problem is, since the beginning of this administration, it's hard to actually understand the policies that they've been doing, at least for the time being. Today, it is geopolitics attacks on every American driver and businesses. That's from one side. What's the achievement that we've seen? So far, we had a government shutdown. Last month, we had over 92,000 jobs lost. We had also higher unemployment rate. Inflation supercore is at 3.3%. You had also the Supreme Court ruling the tariffs illegal. This will mean you'll have refunds, higher, also record high in debt, higher deficit now than anywhere before. So I think it's just hard to say that this is just a small price. The question is for how long this is going to continue. And if we continue over 4 weeks or so, I think Iran is basically using the American consumer as a new pressure. If the GCC, which I think at some point there will be a very serious diplomatic movement from all over the GCC, if not even all over the world, to try to contain the damage. Because at this stage, now you have, when you look at the bond market, which is giving us a signal, some sort of, that we are in an early stages of a full-scale panic. Dow Jones is down about 1,000 points, and still it's not the U.S. session yet. We'll have to wait and see what happens. But it is hard to understand this administration, but at the same time, we have to deal with it the way it is.
I'm really interested in what your clients are both asking you as the global equity strategist, and indeed what they are telling you about the pain threshold at this point for them and their investments, and where you see investors sort of hedging their bets at this point.
At this point, the biggest hedge, at least when we were talking about war and oil, you have the options contracts. Even traders, from what I saw, at least during the Asian session, traders are pricing in much more than $150. So they're pricing in about $200 and $220 at least for the next or until April. Now, what are they telling us? There's basically, the panic mood, or at least the fear that this escalation would not basically stop here, At the same time, they're going to be very selective, and most likely we will be seeing a lot of traders try to what we call it the hit and run trades, which is trying to make a quick buck because of this move. At the same time, we hope at some point that a relief or at least any kind of de-escalation, even if the de-escalation comes as a statement from anyone in the administration, because even with Donald Trump saying yesterday that he will see about the new leadership in Iran, that didn't actually help. That didn't actually help much. So, despite the fact that also America's shale advantage means that they are maybe the least impacted economy, but this is only for the time being. This is for the short term, not for the long term. So I think it's going to be very interesting to see what happens at the end of this session.
And you're right to point out, in every sort of, chaotic situation, there are those who are trading the volatility, of course, and there will be people looking for opportunities in this. And, there will be clearly some money to be made, and not by the retail investor necessarily, but by those who are professionally involved in this. Last question to you, given where you are based, and it's good to have you from this region as we see the sort of, the impact of this US-Israel war on Iran, very keenly impacting this region where you and I are. What's the impact here on sort of local markets, local investment decisions, and the sort of, again, the pain threshold for this region, very specifically of the Gulf?
I wouldn't say there's a huge pain. The pain is basically the continuous attacks on the region. That's from one side. From a revenue standpoint, it is basically a shortfall, but at the same time, it's not going to continue for a long time. They're still basically selling the oil. They're still selling LNG, but it's in the storages. But at the same time, I don't think so on the business side. Everybody's seen, even on social media, that people are still feeling safe, despite the fact that we're seeing attacks every day, alerts every day. But people are going into on their normal day-to-day life, except the fact maybe most of the people would prefer to be working remotely from home. So I think the pain would be just basically the continuous attack. At the same time, at some point, I believe that the GCC are definitely wise enough to try at some point to find a way out of it. Whether if it's going to be a deal with Iran, whether it's going to be a mutual deal with the US at the same time. But I think it's going to be a short-term pain, but it's not going to be something that will affect, let's say, the books, if that's the right way to say it.
Yeah. It's good to have you, Noureldeen. Stay safe there in Abu Dhabi. We are all living through this. You're right to suggest that when we're not, seeking shelter as a result of these alerts, life does go on. Resilience is a cliched term oft times, but I mean it is a community here who, by and large, are just getting on with daily life. It's good to have you, sir. Thank you.